I'm Real John AG, and I need to share something with you that can't wait. Just 48 hours ago, the U.S. national debt hit a staggering $36.8 trillion. To put that into perspective, let me tell you a story. I received an email from Barbara, a retired school teacher from Ohio, that really caught my attention. She told me that in 2020, she had $214,000 in her retirement account. Her advisor suggested she keep her money in cash and bonds, which seemed like a safe bet. But fast forward to today, and she's lost $86,000 in purchasing power without even spending a dime. That's right, her money can now only buy what $128,000 could have bought 5 years ago. Barbara's not alone in this struggle. While 62 million American retirees are watching their savings quietly disappear, something interesting is happening with silver. Its price has skyrocketed from $11.77 to over $34, a 190% gain. Meanwhile, the US dollar has lost over 40% of its value since 2000. I'm going to break down what's happening using government data, Federal Reserve records, and mining industry reports to show you why this is the biggest wealth transfer in American history and why you're on the wrong side of it. The U.S. national debt is a staggering $36.8 trillion as of June 2025. What's alarming is that in 2000, the debt was $5.7 trillion. It took 224 years to accumulate that amount. And in just 25 years, an additional $31 trillion was added. Every dollar of that debt was created by the Federal Reserve, which means every existing dollar, including the ones in your bank account, became worth less with each trillion printed. The Federal Reserve's own data shows that the money supply has increased by over 460% since 2000, from 4.6 trillion to 21.2 trillion. This is why your groceries now cost triple what they used to, and your property taxes have doubled. Your dollars haven't increased in value, they've actually decreased. Now, let's look at what's happening with silver. In 2000, it was trading at $5.30 an ounce. Today, it's above $34, a 540% increase. This isn't due to speculation. It's because silver has become the most important industrial metal and the most undervalued monetary asset. The Silver Institute reports that global demand for silver reached 1.21 billion ounces in 2024, while mine supply was only 823 million ounces. This deficit is being filled by depleting stockpiles that have been accumulated over decades. The demand for silver is exploding, driven by the growth of solar panels. The International Energy Agency reports that the world installed over 420 gigawatts of new solar capacity in 2024, and each panel requires silver. The world is on track to install even more in the coming years, with China alone planning to double its solar capacity by 2030. Silver is also critical in electric vehicles, smartphones, and other technologies. Central banks are buying gold at a record pace, with the World Gold Council reporting that they purchased over 1,037 tons in 2023. The People. The Bank of China is adding gold to its reserves every month while dumping U.S. Treasury bonds. This is a significant shift, and it's not just China. Other countries like Turkey, Poland, and India are also buying gold. In every precious metals bull market, silver has outperformed gold. From 1970 to 1980, gold gained 2,400%, but silver gained 3,600%. If silver returns to its historical ratio with gold, its price could rise significantly. For example, if the gold to silver ratio returns to 50.1, silver could be above $50 an ounce. If you're 55, 60, 65, or 70 years old, you need to know that you're being hurt the worst by the current economic situation. The Social Security Administration reports that the Old Age and Survivors Insurance Trust Fund will be depleted by 2033, and benefits will be cut by 23%. At the same time, the cost of living is increasing and your fixed income is buying less than it used to. Your financial advisor may not be telling you that physical silver is the only asset with zero counterparty risk. It's real, tangible wealth that you can hold in your hand. Throughout history, silver has never gone to zero, while over 570 fiat currencies have lost all their value. The US dollar has already lost 98% of its value since the Federal Reserve was created. To put this into perspective, consider this. In 1964, the average American worker earned $2.50 an hour, and a gallon of gas cost 31 cents. If that worker saved 10 silver dimes, those dimes would be worth over $22 today, still able to buy 4 gallons of gas. But the $2.50 in paper money would barely buy 1 gallon. The worker's silver preserved its purchasing power while the paper currency lost almost all its value. The BRICS alliance is building payment systems that bypass the US dollar, and countries like Russia and China are settling trade in local currencies. This is a significant shift, and it's happening now. Every time a country stops using the US dollar for trade, it increases inflation and destroys purchasing power. This is not a future threat. It's a current event that's accelerating. Close. I'm showing you only half the story so far. The financial industry is terrified. You will hear the rest. 3 days after I started gathering this information, Gerald, a retired banker from Texas with 31 years of experience at one of America's top 5 banks, sent me an email. He told me I was only scratching the surface. Gerald confirmed that my information about silver and the dollar was accurate, but I was missing what's happening inside the banking system. He said I was missing what banks are doing with gold and silver while telling customers the opposite. Gerald exposed that his former employer had increased its physical gold holdings by over 300% since 2019. They did this quietly, without press releases or announcements to retail customers. They could do this because of Basel III, an international banking regulation that reclassified physical gold as a Tier 1 asset. This means banks can count physical gold as the highest quality capital on their balance sheet, equal to cash and U.S. Treasuries. This change gave banks a financial incentive to hoard physical gold while telling customers to keep their money in savings accounts earning 4% interest, while inflation ate away 8 or 9% of their purchasing power. Gerald watched his executives load the vault with gold bars, while the customer service team convinced retirees to roll their savings into CDs paying below inflation. He knew he had to leave when he realized he could not look another 70-year-old in the eye and say their money was safe when the entire foundation was cracking from the inside. The COMEX data proves the physical silver market is reaching a breaking point. As of May 2025, registered silver inventory dropped below 30 million ounces, the lowest level in recorded history. This amount of physical silver is supposed to back hundreds of millions of ounces in paper contracts. There are over 150 paper claims for every single physical ounce available for delivery. If just 2% of contract holders demanded their actual metal, the entire system would default overnight. This is not theoretical. In March 2025, delivery demands spiked 47% compared to the previous year, and the exchange had to scramble to source physical metal from London vaults to meet obligations. London's silver holdings are also draining. The London Bullion Market Association reported that silver holdings in London vaults fell by over 150 million ounces since 2021. The physical metal is vanishing from Western vaults at a mathematically unsustainable rate. J.P. Morgan Chase paid $920 million to settle criminal charges with the Department of Justice for manipulating the precious metals market for over 8 years. This fine was a small price to pay for the billions they made during that time. Gerald told me every major bank has a precious metals desk, and they all know silver is the most suppressed commodity on Earth. If it traded at its true supply and demand value, the entire paper currency system would be exposed as fundamentally broken. When manipulation ends, prices do not just correct, they explode. History proves this with mathematical precision. In every precious metals bull market, silver outperformed gold by a multiplier of 2 to 1, sometimes 4 to 1. The gold to silver ratio sits at 85 to 1, meaning it takes 85 ounces of silver to buy 1 ounce of gold. The 500-year historical average is 50 to 1, and at the 2011 peak, it hit 32 to 1. Major banks have published gold price targets between $3,000 and $3,500 within 18 months. If gold hits $3,500 and the ratio returns to 50 to 1, silver will go above $70. If it hits 32 to 1, like in 2011, silver will go above $109. The entire global silver supply is worth approximately $1.2 trillion. Apple, a single company that makes phones, is worth over $3 trillion. Silver is a metal that is essential to national defense, solar energy, electric vehicles, 5G networks, artificial intelligence infrastructure, medical technology, and water purification. A metal that human civilization cannot function without is valued at less than 1/3 of a phone company. The FDIC has only $128 billion in its insurance fund to cover over $10 trillion in insured deposits. This means they have 1.27% coverage. If just 2% of American banks failed simultaneously, the fund would be completely insolvent, and deposits above the insurance limit would be subject to bail-in provisions. This is not conspiracy. This is current United States law. Gerald told me that in 31 years of banking, he watched 3 major crises. And every time, the same pattern repeated. Banks protected themselves first, executives second, institutional clients third, and retail depositors last. Gerald moved 40% of his personal retirement into physical silver and gold 7 years ago because he saw from the inside what most people will only realize when it's too late. In 1964, a working American could save 10 silver dimes from a single day of work, and those 10 silver dimes are worth over $22 today. The silver held its purchasing power perfectly for 61 years, but the paper currency lost almost everything. Over 570 fiat currencies have existed in world history, and every single one that is no longer in circulation went to zero. The US dollar has already lost over 98% of its purchasing power since the Federal Reserve was created in 1913. Verify everything I've shown you today. The J.P. Morgan settlement is public court record. The COMEX inventory is published daily on the CME Group website. Basel III regulations are available on the Bank for International Settlements website, and the FDIC fund balance is in their quarterly banking profile.